Hi, Joe Waller's here. I'm trying to teach what I can here about Bollinger Band theory and how I use it to help me find better trade setups, more high probability trades, if you will. Low risk, high reward trading is the way I like to go here, and I usually prefer an hour or 4-hour trade chart. Daily's fine. On some currency pairs you're probably better off using the daily, but on some of the more major popular currencies, like the euro, the Aussie, the yen, well, especially now the yen this particular time, sometimes that's pretty slow though. But if you're dealing with just the main ones, euro, Australian dollar, and the British pound, you're probably going to be able to play the hour chart, the 4-hour charts, and do really good. And maybe make 4 or 5 trades a week is all you got to make 100 pips and trading part-time. And I just prefer to go that way. I used to trade 15-minute charts, 5-minute charts, and it was just a zero-sum game. Whatever I made, I'd lose. There's just too many false signals, and that's where, as my trading has evolved, Bollinger Band theory has became more important to me. It's easier to find resistance levels. As you see here, you're able to contain the market kind of between a certain band here, and this is the first deviation band here. Most people, when they put Bollinger Bands on the charts, they'll put the second deviation band, and the problem with that is the market, it'll hit it like it would hit here. If it had it printed out, you'd see it, but it doesn't end up being a real good indicator because it doesn't bounce off of it. Now if you use a 1 deviation band here, this becomes a trading range between here and here, and the whole idea is to get something that's going between here and here, and it's much easier to get in the good trades when it dips below like this and it closes back up inside. There's a tendency for it to go to here. If it's strong enough, it'll go back to here. Now, this being a 200-day moving average, you can see it's going up. When there is a dip below the 200-day, it's very brief, and if you wait until a candle trades and closes inside of this range here, and the line turns blue at the same time. I mean, you could have actually taken it here if you want it. I probably would have waited for confirmation till it is blue. And if you took it right here, you're looking at 96.87. This is something like 97.36. You're looking at about a 50-point trade, and not very much time frame. 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7 hours, 8 hours, 9 hours, 10 hours, it finally popped. And I know it doesn't sound like much, it's 50 points, but if that's a $5,000 account, that's $250, and you're done for the day, and you made one trade. And that's the way I like to trade. I mean, cut your losses. You're not going to win every time. Don't ever think you will. The more you trade, the more you'll lose. That's just the way it is. But overall, the more you trade, if your system's good, you should have a better winning percentage. And I'm just trying to give you a better perspective on how to look at markets. I know this is just one example, one currency here, but markets will follow Bollinger Bands. Like I said, if it closes on the inside, more than likely it's going to be going to the other end of the range here, and you might have to wait, but it's worth the wait. I tend to enter trades at good times, turn the computer off, I go play basketball, go to the gym, watch a movie, fall asleep, and I always make more money when I'm doing something else and not watching. So just a word to the wise there on your best trading is not going to be when you're sitting there watching it, because you'll get scared. You'll get out of a good trade more often than not and miss out on the big money more than often than not. So this is how I trade. Now, if it kept going up, all of a sudden You saw this Bollinger Band starting to contract again here. Well, there's a good possibility we're going to have a little bit of consolidation here. So you can anticipate that. Look at this. It closes right below the first deviation band there. And perfect place to sell. As you see, you could put in a short stop, 30 points. You'd be fine. And 1, 2, 3, 4 hours later, it's going to hit this other band. You can get out of the trade. You just made approximately 40 pips. So not bad. You know, you're making 10 pips an hour. Be $200 if you had a $5,000 account with trading half a lot. So that's how you find the good trades. You know, I mean, you can't just take every time it turns red, take it, or every time it turns blue, take it. You know, you've got to find, you got to pick your spots. When there's a dip like this below it, 200 days going up, you know, that's a good point. If it's went up quite a while, it gets below it, turns red, chances are it's going to be going through this and to this end, and that's exactly what it did. So just trying to give you an idea here how you can pick your spots, trade less, and actually make more money. And really, isn't that what it's all about? So just keep on learning, and I'll try to keep you up to date here with what tips I find here that work for me here. And I'm just trying to bring everybody up to speed here and making consistent profits. And stick with the 4-hour time frames when you're actually using live money. The smaller time frames are good for learning, give you an idea what's going on, maybe even help you find better entries. But you could literally take an hour time frame, check it every hour, and make a decision whether to trade or not. As you see here, you would have found this one here. I mean, you wouldn't have been, you would have done real good in a trade setup like this here, or a trade setup like this here. And I hope you're getting the idea. If you have any questions, email me. You can go to my website, meangreenmoneymachine.com. You can find my email address, get a hold of me there. Otherwise, just jdub@meangreenmoneymachine.com is an email you can get me at too. So.